And my next guest is staying bullish. Vivek Arya is senior semi-analyst at BofA Securities. Vivek, talk to everybody. I'm still getting calls and comments of what happened on Friday. And then everybody saw the Korea trade overnight, which was just a reaction. But they're thinking that's now anticipatory and that this is all breaking. What do you tell them?
Sure. I think, Kelly, what's happening is that the debate has fundamentally shifted this year, even more so to the benefit of semiconductors. We had our Bank of America Global Technology Conference last week. Last year, the debate was that if they build it, will they come, right? This year, the debate is, can you build fast enough? So the debate has completely shifted from the hyperscalers having to justify the return on their investment to just constraints everywhere you look. So whether it's in computing, whether it's in memory, whether it's in networking, whether it's in storage, whether it's in power, and we think semiconductors are a very critical part of helping to address a lot of those constraints. And that's why I think it's not a surprise that the SOX index has done so well, primarily driven, I should add, by earnings growth rather than price to earnings multiple expansion. The
reaction I get is from people who go, look, did you see that price target? $1,200, that's crazy. I mean, what do you say to the, and I'm talking about people who've been in the market a long time. They've seen this game. They've seen this movie before. They know what happens. Everybody chases price targets on the way up. Then there's going to be a move and they're going to chase them down. So, and they're almost in disbelief that anything meaningful can last longer than the kind of action that we've seen in this strong rally the past couple of weeks. What is your message to them?
Sure. I think that to some extent, the investors who were impacted by some of the historical cycles, whether it was the telecom cycle or the build out of the internet, I think they saw a lot of infrastructure being deployed, but the utilization of that infrastructure was extremely low. And right now, what we are seeing is that the usage of this infrastructure is exceptionally high. In fact, the likes of OpenAI and Anthropic, they are trying to buy computing capacity wherever they can find it. There is hardly a single GPU out there that is not 100% utilized, right? There is no dark GPU. There is no dark compute. Second, I think important thing the industry is doing is planning for multiple years out, right? So there is already a roadmap that goes out for the next 2 or 3 years. And you have these pools of excellence, whether it is in the specific kinds of memory chips, whether it's in specific kind of wafers. So, for example, there is only one Taiwan semiconductor that is helping provide leading edge wafers to the entire accelerator industry. So when you have that one person who is controlling a lot of this production, it is very hard to double order and create that overbuild. So I think what we are seeing is a combination of very strong demand and very disciplined supply coming to the market. And that's very different than what we have seen before. And I think that's why this cycle is a lot more durable. Final point I would make is, look, the three largest companies that I cover, NVIDIA, Broadcom, Micron, they are all trading below market multiple right now. So again, this isn't a case where valuation has gone completely out of control. I think that the growth rates are still able to justify much more upside to these semiconductor stocks.
Yeah, and to your point, look, and I share what I hear from people who are skeptical and a little worried about the rally in order so that you can kind of push back on it. And when I look through your coverage list, I mean, if any, the semis are up 66% year to date. I'm not sure there's a single name in your entire coverage list that's lower on the year. You are neutral and underperform on a few stocks, which have done incredibly. And if anything, you'd look at this and go, yeah, you were too cautious. And so that's the difference between those who are not looking at the numbers like you are and just saying, well, this seems crazy to me. And then you're right here looking at the numbers, trying to kind of separate this out. And it doesn't even matter because basically this rally is so big, it's taken up the entire space.
Right. I think there is a belief, perhaps incorrect, that the hyperscalers can grow without spending on their computing infrastructure. And I think one has to change that, because if you look at the large search companies or the e-commerce companies or the social networking companies who have 3-4 billion plus subscribers, how do they grow 10, 15, 20, 25% a year without investing in their computing infrastructure? So I think people are more willing to believe that those companies can continue to grow 10, 15, 20% a year. But that is simply impossible without them investing in their underlying infrastructure that is helping them monetize, right? Get more insight about every user they have, right? The number of users, right? When you have 4 billion users, the number of users is not growing 15%. So how do you grow 15 or 20%? It's by extracting more insight about the user.
Yes.
And the only way to make that happen is through the underlying computing and the semiconductor infrastructure.